Hey everyone, welcome back to this weekend's market breakdown. Let's go over Euro AUD. Let's see how attractive this pair really is. I do kind of see that this pair is going on a downward trend. We can kind of see here, not really consider a trend, but if it does create a nice structure, I will bite. And we're looking at around 140 pips. What ratio? 1 to 4.6 ratio, which is pretty good odds to me. If we look at this leg here, it's to me it would be considered a downward trend, especially that it went through this line here. So if it does create a sell structure, I will get in this trade and see if it will work in my favor. AUD USD, I do like it. I do like that if we were to just go off on this leg itself, this leg right here itself, it does look pretty attractive. If it does create a bigger structure, right, and it does fit my criteria, I would try to get in on it. 130 pips, not bad. 30. God, I can't freaking talk. 30 pips SL 1 to 4 ratio. That's not bad. And as a matter of fact, yeah, correct. Down, up. So it's not bad. I do like it. And if it forms something, let's see what we can do with it. Euro USD. Let's take a look. Euro NZD. It's probably gonna go up. Continuation. I do think it's gonna go upwards. It's past this M structure, but I don't really like what it will form. Okay, Euro USD, it is a pretty nice pair to get in on. Again, I don't like this leg right here. I don't like this structure right here because it's kind of screaming bad structure for me. I didn't like the circle area. It is coming down. I wonder, don't really know how to make sense of this. Again, I still don't like this area. That's throwing me off. If not, I would be a little attracted to it. But again, the other thing that's throwing me off, that's real, because if the structure came down and correct in this area, right, I would probably be in favor of taking a sell on that, right? It's still not the best precise entry, but it's just a better read on this than what's going on now, because what's going on right now, it's really unpredictable. It's almost like it doesn't know to go up or go down. The activity here is just telling me, should I go up or should I go down? So I really can't have a good read on it. And also the other thing that I do not like is this right here, this quick spike right here. This quick spike, to me, it doesn't really fit into a structure criteria. So that's why I have an iffy about it. So these two areas really telling me to, like, red flag, it's best to stay out. Just watch for it instead. I do like the ascending within ascending. That's the only thing I'm attracted to. But these two areas just telling me I'd rather stay out of it than risk my capital. Because if I were to risk my capital, I'm going to want to win that 1% back. If I were to try to win that 1% back, it's just, it's the mentality, the mental stability of it is going to be rough. So I'd rather not take a risk on that. Let's see. GBP CAD. Okay, so this pair, right? We kind of predicted that it was gonna go down, but I said I'd rather not get in on it. But ultimately it did come down on a 100 pip standard. I usually do 30 pips SL. Anything more than that, it's just I'm not interested. I'm capping it at a certain level. I'm not gonna keep continuously say, well, this one it would, because ultimately this trade it did go through, right? If we give it a little more room to breathe, let's say 40 pips, right? I mean, the spread and everything might kick me out, but let's say I give it 45 pips. Now that's 1-to-2 ratio, 1-to-2.3. That means if I were to lose 2 times in a row, that's gonna be break even. So that I don't really like that odd. So I like to cap it. 30 pips works for me, and the ratio works for me. The management side of this, it's just really good. The precision, but I'm gonna stay not getting these kind of trades. This is a flag right here, a bear flag, a clear indication of a sell, and I'd rather not change my strategy just based off of one trade. And this trade is super ugly read on this. It's just like, what? So like right here is no good impulse, and then it spiked up. Who the hell knows how it would spike up? Comes back down, do another flag, and then spike back up. So I'm just glad I stay out of it than getting involved in it. But again, it ultimately did go through. But I'm still not interested in this. Stick to your strategy. Stick to your strategy, right? Your strategy is clean, so stick to that. GBP JPY. So on this one, to me, right, we were waiting for a flag, right? We were waiting for a flag, and it ultimately didn't form a flag. It ultimately formed a impulse instead, right? But these kind of impulses, you can't have a read on these. You don't have a magic oracle ball, right? Magic ball that tells you when it's going to give you an impulse. The best thing you can do is find a correction, then build off of that, right? Use that as the foundation. Actually use the proof of direction as your foundation, then build it off of structure. Then you say, okay, I got the proof of direction, I got the precise entry based off the structure, I got a good risk to reward ratio on it, and then just get in on it, right? That turns all the odds in your favor to have the best possibility of a success in a trade. So in this case, it didn't form a structure, it actually formed an impulse, and it actually tells me, okay, don't go in, not interested, right? Based off of that, let's go move on to GBPUSD. GBPUSD. Yeah, this is another one that is just a no-go, right? No good. Structure is bad. I don't like how it's forming. We were looking for a bull flag, but ultimately it went off of something else. Now, here's the thing: just because it's from another form of correction, it doesn't mean that it's not going to be a long run. There's still a chance that it's going to go up, right? But it's just not within our criteria and our standard and what we're looking for within a structure, that it's stay out of it. It's best to stay out of it. Stay out of it. Keep your mental stability. I keep preaching about this because I myself need to practice that, right? So stay out of some of these trades. Some of these trades, they're not even worth it. GBP USD, USD JPY, actually, it's the last one that I'm looking at. On a higher time frame, you can kind of see that if it were to form more corrections here, it's going for a continuation most likely. If more activity becomes of this area, you can kind of have a read on it, right? You can kind of see, well, you can obviously see a clear impulse in this area, and if it forms more activity, right, it can very likely turn to the downside. But this is kind of the read on it. I don't really have anything, right? GBPUSD, we were actually looking for that one, but then it formed another direction. Another structure that would be able to take another direction, and we don't have a precise entry on these, right? Precise entry on these is one of the criteria within the trade, because the market is super volatile. So if it's so volatile, I'm not gonna get into an entry that's not precise, because it's gonna take me out. If it's not a precise entry, then the stop loss is gonna have to be bigger, and you don't even know if that's tested. So if it's not even tested, you don't even know. Oh, it's definitely gonna hit that stop loss. Sometimes when it's tested on multiple occasions, so many times where okay, it shouldn't hit 30 pips, because if it does hit 30 pips, anything over that, it's most likely going to a different direction. In this case, you need to have a precise entry.